Hi, this is PR Sundar. Welcome to this special episode, What is Wrong with FIIs? And every time people say, Mr. Sundar always talk about FII selling. When they sell, we have to talk like that only, right? First, let us try to understand the macro picture. And Dow Jones started trading from 1895 or 1896. So that is one market which has more than 125 years of history. In 1929, there was something called Great Depression, and Dow Jones actually fell nearly 90%. Just imagine an index falling 90%. That was considered to be one of the worst thing that happens once in a century. And then after that, Second World War and many other things are there, but the markets did not fall that much. That is called Great Depression 1929. And then what happened? In the year 2008, in between there were some problems, In 1987, there was a crash of 22% in one trading session. Then in 2000, there was something called dot-com bubble. All the IT stocks fell. I think now also same thing, right? All the IT stocks are falling in US. And then in 2008, there was a big crash called Lehman Brothers collapse. And later, they started naming this as a Great Recession. So 1929, Great Depression, and 2008, Great Recession. And they use the word great by considering that this will be once in a century affair. But unfortunately, in the next 12 years, we had another big problem called coronavirus. And the markets have fallen, but they did not fall as much as Lehman Brothers collapse period. And Nifty has fallen 50% during Lehman Brothers collapse period. But in coronavirus period, Nifty has fallen 40%. That was the second big problem in this century. And unfortunately, second time, and this US inflation data, the commotion, the way Nasdaq stocks are falling. I think Netflix has fallen 70-75% and still falling. And many stocks gap down 40%. One bad result, gap down 40%. And this is a very, very big crash, we can say. But again, to the less magnitude. Lehman Brothers collapse 50%, coronavirus 40%. Now I think only Nasdaq has gone to 30%, but the Dow and S&P not even 20%. And what is happening? And because of this global turmoil, interest rate hike in US and Russia-Ukraine war, and then coronavirus lockdown in China, and there's a lot of food shortage, so many problems. And our currency started depreciating, and then FIIs started selling. Although it is quite disturbing that FIIs started selling, but a lot of social media messages going around which are looking very, very disturbing. And somebody tweeted, whatever money FIIs have brought in the last 11 years or 12 years, that has been taken out in just 5 months. And that message has been going around in all the WhatsApp groups, all the Telegram channels, For the first question is that really that bad? So number one, definitely it is not that bad. And why I'm telling you? The first thing is that what this person has done, he has gone to certain websites and looked how much FIIs are sold in the last 12-13 years and how much they bought, just added up both. But that does not give a correct picture. Number one, every day in the evening, both NSE and BSE, they declare the data. FII today sold this much and or FII bought this much. But remember, that figure is only a provisional figure. It is not the accurate figure. So the data is subject to change. What happens on the following day, one day later, and SEBI declares the data in the SEBI website, and that is an accurate data. I'm just going to show you. I'm looking at Money Control website. You look here, cash market, month till date. The month till date in the month of May, this says 51,800 crore is the selling. And from where this data is taken? This data is taken from the NSE website every day evening. But instead of looking at the cash data, I'm looking at FII SEBI, and you can see this data is not showing 51,000 crore. This data is showing only 35,000 crore. There's a huge difference of 16,000 crore. But again, this data is one day later, which means that this video is being shot on Friday morning. Thursday NSE data has been taken, but Thursday the actual data will be updated only on the Friday evening. That means today evening only it will be updated in SEBI. So therefore, this one you can say one day less. But again, as per NSE website, yesterday FIIs have just sold only less than 2,000 crore, and maybe plus or minus 500 crore difference with the actual data. Still this can go to 33,000 to 37,000 crore. This cannot go to 52,000 crore. The first thing is that we look at, I also look at it, and every day in the video also I say today FII sold this much, today FII bought this much. But remember, they are not the accurate data, they are only a provisional data, and sometimes there's a large difference. Even to shoot this video, I was just checking the data. I was also shocked. How come 35,000 and 51,000 crore is such a big one? So remember, one, the data is not reliable, and mutual SEBI data is more reliable because SEBI takes time to collect the data and gives one day later. This is one thing. Second thing, what these people have done, every day how much FIIs sell, every day how much they buy, and they added up the figure, but that is only tells you one part of the story, that is only a secondary market transactions. But when it comes to stock market, there are two markets, one is primary market and one is secondary market. I'm just giving an example. I bought one share from State Bank of India share in the secondary market, later I sell it in the secondary market. Then I buy one share of LIC from the public issue, and now I'm selling that in the secondary market. So if you look only at the secondary market transaction, you will see two selling, State Bank of India selling and LIC selling. And you look only at the secondary market, buying data will show only one data, State Bank of India bought. LIC bought will not come because LIC shares have not been bought from the secondary market, is bought from the primary market. FIIs keep on applying for public issues. Not only public issues, a company sometimes come out with a public issue, sometimes they come out with a program called Qualified Institutional Program. They issue shares and it's not issued to the public, it is issued only to qualified institutional bidders, and it's called QIP. And bulk of shares is sold directly to the foreign institutional investors. That data will also not be reflecting in the secondary market, but when they sell those shares here, that will be reflecting. So what I have done, I have just downloaded the data for your reference, and I'm going to show you that data. And look here, the people have taken from 2009, but I have taken from 2010. Just 1 year is not going to make a big deal. In the last 12 years, primary market, so they have pumped in 3,48,000 crore. And secondary market, buying, selling, buying, selling, buying, selling, it shows 3,08,000 crore. Again, this data is taken from SEBI website, not taken from the NSE website. But I really don't know why there is so much of difference. If you combine both primary market and secondary market, in the last 12 years, FIIs have pumped in 6,56,000 crore. So it is true that nowadays FIIs are selling, and they are selling in huge quantities, and it is a cause of concern. There is no doubt about it. But what is being projected in the social media, that is actually really not that bad. So that's what I'm just trying to tell you in this video. And also I'm just trying to tell you, don't only look at the NSE website, but you also look at SEBI website to know the exact data. And also factor in the primary market transactions. FIIs are selling and markets are jittery, Particularly in the month of May, the first 2 weeks we fell drastically. In the last 2 weeks, because of US market, this target, inflation, like all the IT stocks started falling. So we have been going through a big thing. But despite that, we are nowhere near Lehman Brothers collapse of 50% fall, nowhere near the coronavirus fall of 40% fall. The fact is that we have not even fallen 20%. As long as we have not fallen more than 20%, we are not in bear market territory. Normal 0 to 10% move upside and downside is considered as a normal market. 10% to 20% is considered as correction. More than 20% only considered as a bear market. So as of now, we are down but not out. And markets are jittery, there is no doubt about it. FIIs are selling, there is no doubt about it. And sometimes the speed with which they are selling, even things become alright, they will come at a higher speed to buy and market can go higher. So therefore, there is no reason to unduly worried about this FII data going around in the social media. I hope you enjoyed watching this video. Thank you for watching.